Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. With our show topic is what's up with retail. Retail has certainly been a sector that everyone is paying attention to today. And this segment is brought to you by Bull Realty Asset and Occupancy Solutions. Visit bullrealty.com. And please welcome my guest. It's Joel Murphy. He's CEO of New Market Properties here in Studio One. Joel, thanks for being with us.
Michael, good to be here with you.
Well, Joel, you guys have properties over 7 states, 3.3 million square feet, 16 markets stretched from Atlanta all the way over to Texas and everywhere in between. You have a lot of grocery anchored centers. So I'm wondering, with all this news about retailers going bankrupt and retailers closing stores, how do your retailers feel right now? What are they saying to you? How are their sales, as far as you know, and what do they say? What do they think?
Well, let's take that question and break it down a little bit. So you say retail, okay? Well, the first thing I'd say, in retail, those are wide spectrums. So all the way from malls, enclosed regional malls, fortress type malls, the great malls in the great cities, the not so great malls in cities, all the way to unanchored strip centers and everything in between, like might be a power center, a grocery anchored center, open air specialty center. We now at New Market, I'm exclusively in the grocery anchored center. So let me tell you about what the broader group is saying, and then kind of what our tenants are saying. Okay. So on the broader group, I'd say it depends, right? So, if you're Macy's and Sears and the owners of B and C malls and secondary and tertiary markets, it's a hard time because those people are closing stores. They're going to continue to close stores. Their businesses basically have evaporated. So that's a tough time. In between, there's a lot of really good news. And so when we're talking to investors, talking to partners, talking to our shareholders, we're talking about the retail that we have, which is 100% grocery anchored shopping centers with market share leaders like Publix, like Kroger, like Tom Thumb, Harris Teeter, that are kind of spread across our markets. Those grocery anchored retailers actually are having comp store sales that are increasing, over last year. And that's really even in the face of about a 2% food deflation. So if somebody's up 2%, they're really up closer to about 4%. So in the grocery centered space, it's really quite good now.
And the grocery tenants themselves, how are their sales faring compared to, say, a year or so ago?
Well, they're up overall. There's Kroger is probably has announced theirs weren't quite as good as they have been in previous years, but yet over what they were doing the past year. And that could certainly just be in new gross sales because they've added stores, but also the actual stores they have year over year. Publix similarly. So that, but look, it's a low margin business, tight margin business. Probably wasn't as good as it was last year as it was for them the year before, but their sales are growing and their customer traffic is growing, as opposed to kind of what's going on with Macy's and Sears, which they basically kind of wondered, where did their customer go?
So what are the trends, Joel, that you see with these grocery stores today? Are they going to downsize more or supersize more? What are you seeing for trends?
Well, again, it really depends on who. So let's take an example. In the Southeast, in their stores, Kroger owns a lot of national brands all across the country. They own chains. The largest, they and Albertsons are really the two largest. They have over 2,500 stores across the country, not always under the Kroger brand. Their strategy has been to get their stores bigger. Okay, typically like almost twice as big as the stores they might have before, 130,000 square foot store versus 50. Probably overall nationally the trend is to stay moderate and maybe even be slightly smaller because I think a lot of these grocery stores are realizing that electronic commerce is out there, and so they might be able to distribute food to their customer out of a smaller footprint and still remain profitable. Publix, for example, their average store is 45,000 square feet.
And what about these shop tenants today? What type of shop tenants do you like to put around these anchors, and which ones are doing better than others?
So the type of centers that we have are what I would call necessity-based. I actually refer to it with some of our folks as internet-resistant type retailers. So over 85%, almost 90% of our net operating income comes from 5 food groups: grocery stores, food and beverage, think restaurants, service uses, healthcare, and fitness. We have very little apparel. I do have some of that. Very little electronics. Do have some of that. Very little books. do have some of that, but a very, very small percentage. And those folks, a lot of them are local, a lot of them are regional, a lot of them are franchises, Subway, Hair Cuttery, local restaurants. We like local tenants. So while their credit profile might not be the credit profile of a Publix and a Kroger, they've got their little business that is really important to them, and we pay attention to make sure that those stores are successful. And they're very symbiotic with the grocery store because they're more daily traffic generator types.
Right. So what do you think about the market today as far as buying and selling properties? Are you a buyer in this market?
Yes, absolutely. We're a net buyer for sure.
So you don't think it's time to sell any of your assets today with interest rates potentially going up over the next few years?
Well, I really hope the people we want to buy from are interested in selling, for sure. But, you know, I think it depends. People are always kind of think about that question, net buyer, net seller. And I think you really kind of have to look at that. It's not over whether there's a national trend or whether you should buy, you should sell. It really depends on several things. What is your own business strategy?
Right.
My business strategy is to grow our grocery anchored base in Sunbelt markets. How am I going to do that? Acquire. Some people might say, I've owned this asset 6 years, I've owned it 10 years, it's in an estate, I have reasons why I might like to liquidate. I don't want to be in this market anymore because the public company has told me I need to be in major markets, so I'm going to sell my asset in Greenville, South Carolina, or I'm going to sell my asset in San Antonio because it's not a big enough. Well, I love San Antonio and I love Greenville, so certainly a net buyer for sure. As far as what's going on in the overall economic trend, I am actually a little surprised at what happened with this run-up in interest rates. Historically, you would think the run-up in interest rates would affect cap rates and that they would rise, even though typically, if you look back in last times, 18-month lag, we haven't seen an expansion in cap rate at all in well-located grocery centers, or actually much to my chagrin.
Right.
And I think the reason is some buyers are levered buyers. We will put debt on some of our properties. But some people are saying, well, the reason that the cap rates haven't changed is I think people have a better expectation of the future. And, you know, so expectation of the future is going to have your effect of can you raise rents, and that might might change your view on interest rates because you feel like the future is better.
Right, and as you said before, it depends on the location and the property type. So if you're just doing grocery anchored centers, well, that's kind of a favored class right now, that necessity type of retail, right?
It is, and again, much to my chagrin. But you know, I think there's reasons for it. But you still have to be careful. Just any grocery anchored center is not any other grocery anchored center. We still pay attention to, is it on the right corner? What are the sales? You brought up sales. That is our biggest touch point. We like to buy assets where we really see strong historical sales and sales growth at that grocery store.
Right. Well, if the tenant's not doing well, you're not going to do well, right?
Their success is our success.
That's right. So you buy existing properties. You've developed properties. You've had a long career in the business. So are there some good development opportunities right now out there? Is there still some time to do it?
Well, you know, there are, but they're tough right now. That's really kind of why we're on an acquisition strategy. We do develop. We do have one that's under development now. I hope to have more under development. But they're tougher for a couple of reasons. In retail, for you to do a development deal, there has to be this other counterparty who's willing to play, the tenant.
Right.
Okay, well, they're doing a lot fewer stores. So you think nationally, before the downturn, Target, it wouldn't have been unusual for them to do 125 stores a year. Last year, they did between 5 and 10. Okay, grocery stores, the same thing. They're just doing fewer stores. Now, there's good reason for that. They don't need as many new stores. So I think that's one. So the tenants aren't going to be as aggressive in new development. And the second one is that land value and construction cost is high. So when you kind of put those two together, that doesn't really make for a great development pro forma. High cost, low rent, it just makes it difficult.
And less tenants expanding.
And fewer tenants expanding.
Yeah, makes it
Now
tough.
that said, there are still development opportunities, but there are some interesting trends if you look at this. From 1976 to 2008, on average, across our country, all product types of retail, 147 million square feet of new retail was developed year in and year out. That's a big number. You take from 2008 to 2016, that number is 36 million square feet. Now that's over an 8 or 9 year period. It's over the last 50 years, that number has never been that low for 1 year, much less over an 8 year. And I think it's really a secular deal. So I think the supply side of retail is going to be muted for a long time into the future.
Well, that brings up my next question then, your outlook on the industry, because some people are a little concerned with retail right now based on what you're saying. If we're not putting out as much supply and we're still growing our population, then what's the outlook?
Well, I'm going to bring you to talk to my investors next time. I mean, that is, I think, again, you've got to break out what kind of retail.
Yeah.
I am bullish about the economy generally, but we're very careful about what product type we're going to do in retail. If there's a development opportunity to do, I would not be afraid, nor would any of my competitors or partners be afraid to do a new retail deal. They're just hard to find and make them pencil on a risk-adjusted basis. But as far as being bullish on the overriding fundamentals, I mean, our fundamentals are solid. We're over 95% leased in our portfolio. 10 of our 31 centers are actually 100% leased. Nice. So, but that said, economies and these things are a lot of local tenants. You have to really pay attention.
Yeah. So final question for you. What do you think of mixed-use development? And the retail part of it, obviously.
Sure. Again, I think obviously that's not only just from an intellectual ULI kind of thing, it's what people like, it's what cities like. It's very difficult to execute, and particularly to execute it well. And the reason is each of these apartments, land, office, retail, their own independent real estate cycles. So apartment cycles are in one phase, retail's in another. Well, if you're going to launch a true mixed-use development, you have to launch all of those really at the same time. Well, it might be a great time for retail, not so good for office. The reality is right now it's pretty good, for all of the things. Yeah. But it's still difficult, it's very expensive, but you use, for example, here in Atlanta, there's a project called Avalon on the north side of town, which has all those uses together. But across the country as a whole, they're great properties, and I think they really are the type of properties that are going to stand the test of time through downturn.
Yeah, and your point is well made there with retail kind of being tough at some of those developments. And some of the municipalities want you to put retail on the first floor of some of these places, and it's not a great place for retail because you don't have that grocery anchor. You don't have that draw that's bringing in those shoppers, right?
There are litany across our country of examples, and I'm sure all of your listeners would know one in their community where a jurisdiction said, you're going to build some apartments, we want you to put 20,000 feet of retail in the basement.
Right.
And that's not really, it's a great apartment site, but it's not a great retail site. Yeah. And so the ones that really work are the ones that have their own independent drivers. Great retail location, great apartment location, great office location. But you can't, that's the tough thing, is when you're forced to add a use that really the market doesn't need.
And I like how you put it in the basement. Put it in the basement. Joel, thanks for joining us today. We appreciate your insight.
Sure, Michael.
And stay with us. We'll have more on retail and retail real estate. I'm Michael Bull. This is America's Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out creshow.com.